Good morning, everyone. Welcome. We'll start in a couple of minutes. People are coming through, and we'll kick off in about 2 minutes. Some familiar names here who I haven't spoken to in a while. Michael, Blaine. Hi, everyone. Isabel. Edouard. This is the first time we've done a morning webinar, so we were wondering who would show up. Normally they're in the afternoon. A few more. We'll give it another 30 seconds and then we'll kick off. Hi, Swati. Conrad. Xavier, hi. Welcome, Xavier. And Joanna Johnson. Okay, I think we will, I'm sure a few more people will trickle in, but I'll get through a little bit of housekeeping stuff first and kick off. Welcome everyone to this webinar, actually a meeting, but we'll get to that, to launch the Financial Inclusion Compass 2022 publication and to discuss some of the findings and trends from it. My name's Sam Mendelson. I'm Financial Inclusion Specialist at e-MFP and the lead author of the Compass series since it began. I'm delighted and grateful to be joined by Apricot Wilson and Stuart Rutherford. Their bios were in the invite that you will have all seen, and I won't embarrass them by repeating them here. Suffice to say, it's a huge pleasure. Thank you to them both for having taken the time to carefully read the advanced copy of the paper so that they could prepare some thoughts for us to have a chat today. Moment housekeeping. This is a meeting, not a webinar, as you can see. The reason for that is to try to make it more interactive, use the chat more. You can all see who else is there, but that means everyone starts with their muted, please, and cameras off, which I think everyone is. But and please do use the chat for comments, questions. My colleague Daniel is going to curate the chat and help direct any questions my way. But also, because it is a meeting, that means you can raise your hand, and when we get to after the short presentation I'm going to give at the start, if you want, you'll be able to put your hand on, turn your camera and mic on and ask a question in that way if you wish. Running order for today is I'm going to speak for about 10 minutes at the start. I'm going to give a little bit of the background to the Compass, the methodology and the respondents, the current trends and rankings that came out of the survey, but before that, a poll so that you're going to be asked to participate. Same with the next section of the survey, future priority areas. This will all become clear. I'm going to talk at a very brief high level about some of the open-ended questions in the last part of the survey, and then going to bring in Apricot and Stuart to talk about some of their impressions and involve you, the audience. The session will last somewhere between 45 and 60 minutes, depending on how many questions or observations you have. It will be recorded. It will be available to watch later on YouTube. And my colleague Cami is going to post in the chat a bit later. We'll publish the paper, in fact, all three papers during the session, and the link will be posted in the chat for you to actually read the paper proper in whichever of the three languages you wish. So the background to the Compass was that in 2018, e-MFP came up with the idea of a paper to leverage the type of debate that we often get at European Microfinance Week to build on e-MFP's unique position as a member-based network, an honest broker, and to start a series that would capture ideas from various stakeholders, look at how the current trends are changing, what people think about what will be significant in the future, and to be able to compare it year to year somewhat so that there's a moving snapshot of sector perceptions. We did it again in 2019. And then this happened. And so we did a very different one in 2020. It was in a different time of year. It was done on very short notice. The methodology of the previous two and the structure was largely thrown out. And we started with a blank page. And we asked people, this was in May 2020, so a couple of months in, give or take, of the implications of the pandemic on the financial inclusion. It's worth a read if you want to go back. Some things I think were very prescient and some things were wildly wrong, but it's interesting. That was the COVID-19 compass. Last year, we reverted to the more traditional methodology in the 2021 paper. And today we're launching the 2022 compass in 3 languages in parallel for the first time, which we're very pleased about and which was a lot of work. The links will be put in the chat later, as I said. So the survey it was open for 4 weeks in May, June, online in 3 languages. It's promoted through our members, social media, industry partners, regional networks, and the like. It is not a fully representative snapshot of the sector. It cannot be, but we do our best to ensure good representation from different stakeholder groups that e-MFP has good relationships with. This year, there were 120 complete responses. I can talk about that in chat if you are interested. But from a record 46 countries, we're very happy about. Respondents were invited to, in part 1, there's a list of 20 trends. These are curated each year. Some are added, some are removed based on previous feedback. And they're asked to score on a 0 to 10 scale the current perceived importance of those trends to the sector, and add optional comments on any or all of those 20. In the second part, which was renamed this year Future Priority Areas, they are asked to choose 5 in rank order of a list of future priority areas and give optional comments. This is their personal views on what they would like to priority to be given to in the 5 to 10 year timeframe. And then part 3 has 3 open-ended questions. This is a map of the respondents' locations. What all it says is if you were to compare it to last year's one, it is becoming more geographically diverse. We, of course, see plenty from Luxembourg, France, that is representative of e-MFP's network, but lots and increasing numbers from South Asia, East Asia, Pacific, Sub-Saharan Africa, and the Americas, which we're pleased about and always trying to improve. This is the breakdown by number of respondents. This is not by where they live, but they are asked in the first part of the survey about their geographical focus of work. What is the primary geographical area, focus of whatever they're doing? As you can see, Sub-Saharan Africa has a plurality, then LAC, South Asia. We tweaked the methodology a little bit this year, and you can go into that if anyone's interested. But it's very pleasing to see so many respondents working in those areas. And this is the distribution of the respondents by their organization type. The inner ring shows the higher level thing category that they are asked: FSP, consultants, researchers, and then the outer ring shows the subcategories. There's a record representation of FSPs this year, 41%, which we're pleased about, an increase in researchers, a decline in consultants, a small decline in funders and infrastructure organizations compared to 2021. So now I said that there would be a poll, and we're going to do the first one. Before I show you the list of ranked trends from the survey, I'm going to ask poll the attendees here on a version of it. The So please, you're hopefully going to see a list of 10 current trends. Please choose up to 3 of them based on how important you perceive them to be in the financial inclusion sector today. Camille, would you kindly launch the poll? And we'll take 1 to 2 minutes because these need reading and they deserve a bit of thought. So please have a look at these and choose. You don't have to choose 3, but up to 3 of these. We'll take another 30 seconds or so. Another 10 seconds. It's only to be illustrative. Okay, I will move on because we've got another one to do, but this will be interesting anyway. Camille, would you mind ending the poll and sharing the results? Okay, so we have not in okay. So strategic responses to the effects of climate change is top. Next is a tie between client protection, client side digital innovations, and institutional side digital transformation. And then social environmental reporting is next by my view. Okay, can we stop sharing that, Camille? And this is the ranked order from the survey, which is quite similar. We've got, as you can see, digital transformation institutional side has gone up from 5th in 2021 to top this year. Client side digital innovations remains in the top 3. It's gone from 3rd to 2nd. And strengthening of client resilience, which was a new entry last year after the feedback from the COVID-19 edition, is in 3rd from 1. Of course, at the top, the differences are very slight. Overall, a gap between 6 and 8 over the entire list is significant, but at the top they are close. Would anyone who's not a speaker mind turning just their mics and cameras off, just so we can keep track of who's who? Thanks very much. So that's the list of trends. That's the high-level outcomes. Now let's do another quick poll. Now we're going to do the second part, which was future priority areas. You're going to see a list of 8, and please choose up to 3. This is not current, this is in the future, and these are your own personal wishes. So what would you personally most like to see priority given to developments in, innovations in the next 5 to 10 years? So Camille, would you mind sharing? And we'll take another 90 seconds to 2 minutes. Okay, almost everyone has already taken part, 85%, 88%. Okay, last chance. All right, that's close to complete. Would you mind ending the poll, Cami? Thanks, and share the results. Oh, do we have them? Yes, here we are. All right, so interesting. Green and climate smart finance was a very high 59%. Financial inclusion for the very poor is in third place. Financial literacy, including digital literacy, in 41. Women's empowerment and gender equality, very high as well. Okay, we have some real differences here from the survey respondent base, which is this. A little explanation of what these numbers mean. This is an index score. It reflects both the probability that a priority area is selected and is weighted so that based on its rank. So a rank of 1, which people would give in the survey, is worth much more than a rank of 5. It's then converted into a score out of 100. So 100 being everyone only cares about one thing, to 0, no one cares about it at all. And you'll see from the right-hand column that the top 3 have remained steady for some time. And in fact, it goes back beyond 2021. Among the survey respondents, SME, Agri, and what is called Green and Climate Smart Finance this year, although the name changed somewhat, are the top 3. And what do we have in today's poll on this session? We have Green and Climate Smart right at the top, Agri quite high, SME not so high, that's interesting, but financial inclusion for the very poor and financial literacy higher here than the respondent group as a whole. Okay, thanks. Thank you, Kemi. I want to make sure we've got plenty of time for everything else, so I'm going to move through these bits fast, but anyone who wants to, we can come back and talk about it more later. This is a little breakdown of selected priority areas by respondent type. On the right side legend, you'll see the 5 largest categories of respondent. The numbers are the index scores, so the higher, the more important, and these are a selected 5. What can we see? SME finance is a clear top among all respondents, but it is driven largely by consultants and support service providers. Consultants rate food security very low, however, but they put services for refugees and displaced persons higher than respondents overall. Infrastructure organizations, and this term perhaps just is defined in the paper, but it includes a lot of supranational, international bodies, networks, associations, standard setters, regulators that we put under this umbrella term. They're most interested in green and climate smart finance and food security, but they have low interest compared to others in financial inclusion for the very poor. And then researchers, who are always an outlier group for some reason, give financial inclusion for the very poor by far the highest score of any group. It's almost single-minded interest in this topic among researchers, but which is admittedly a smaller respondent group, than there are fewer than the other ones. So I'm going to very quickly go through the last 3 sections with a caveat that we received tens of thousands of words in total contributions to this survey from some people's hundreds of words for each of the questions. There's no way to fully summarize them here. And I hope that many of you will take the time to read at least the executive summary, if not the paper, in which goes down and pulls out a lot of the direct quotes that are fascinating, because people really do take time to give a genuine insight. But some of the challenges are a real sense that institutions must take up the challenge of digitalization and really facilitate clients to, as one put it, become their own bankers. They're going to have to therefore invest in the technological tools, support research to do this. But a supply side response, while necessary, is not sufficient. It has to be client-led. there's a real sense still that the pandemic looms large among concerns and has had an outsized adverse effect on women. For some FSPs, there is a challenge of a growing and increasingly burdensome reporting requirements. I suspect this is not news to anyone here on this session today. For other groups and for certain respondents, the risks to client protection remain considerable. And there's a whole section in the paper with some intriguing quotes on that. But the real addition this year to the previous surveys, and this won't be surprising, is global risk and uncertainty. And there's a range of transversal interconnected issues here that are to do with macroeconomic shocks, inflationary effects, geopolitical risk, supply chain, food security, all accelerated by the war in Ukraine, but which was already sort of a potential conflagration because of the tail of the pandemic. This is by far the most significant newest entry among people's concerns and challenges. And then in terms of opportunities ahead, digital finance, as always, remains a big opportunity, but comments don't always reflect how strongly they are rated, and it must be seen as a means, not an end. Green finance increasingly is seen more of an opportunity, or it's framed in terms of an opportunity rather than the threat to the environment as a challenge. And respondents largely see it as an educational, a teachable moment, and a chance to build inclusion strategies that improve the resilience of end clients. There are real opportunities to improve stakeholders' understanding of clients' lives and needs. A lot of this comes out of the pandemic, the various research initiatives that have tracked clients. What does it mean for resilience? What are the impact of crises like this, and how to therefore segment to better meet those needs? And there is mention that the largest group of beneficiaries when this is done is women, but it's really conditional upon the leveraging of digital technologies that is done in a way that is equitable, open, and provides equal opportunities. It's gender inclusive. So I think that's plenty. I took a little bit longer than I wanted to there. I'm going to stop sharing now. Just give me a moment. This always takes a few seconds to stop the share, and welcome Apricot and Stuart. Thank you again. And I would like to encourage everyone who's here, please do put comments or questions in the chat. Please direct them to any of the three of us. If it's about the survey methodology, I presume to me, but please do direct to these guys as well. And I'd like to kick off with Apricot, welcome, and ask you thank you for taking the time, particularly as you've just switched jobs, to read the paper in advance and to share your thoughts. What is it you found most interesting about what the survey respondents had to say?
Well, first of all, thanks very much, Sam, for inviting me along here. It's such a privilege, actually, to read this report. You don't often, as a funder, have the chance to have other funders, FSPs, researchers, networks, all in the same room together and all giving such honest and open thoughts. And actually, it's this diversity of opinions that I really enjoy when I read through the survey, and it was a real privilege to have an advanced copy of it. There's four sort of areas that I'd like to go through in particular, two of them in quite a bit of depth. One of them is this difference in perceptions that you're seeing between different groups, notably focusing on the difference between funders and FSPs, because this is something where if you're working as a funder, you see quite a bit of tensions. Moving on to the digital topic, which of course has come up as one of the key priorities. Moving on to to SMEs as a future priority, and then finally concluding with a few words on infrastructure providers. So I'll get back to this topic of divisions in the way that different groups are seeing things. Now, it'd be understandable that there be divisions on a geographic basis these days. Sam has already run through COVID. Of course, there's a political dimension, and increasingly there's a climate change dimension to this too. If you look at the Notre Dame index, you'll notice how many of the most vulnerable countries are very low on the HDI index. But it's not the geographical differences that come through in the survey. What's really interesting is that people working in the same industry, just in different functions, have such different views on the world. And impact measurement is one of the areas this really comes up in. Now, I think quite a lot of people on the phone, on the call here today, are funders. And I would find it hard to imagine there's any funder that doesn't find the current regulatory requirements with sustainable finance disclosure regulation and the taxonomy to be a real preoccupation. What's interesting is that this doesn't seem to be on the radar of the financial service providers as a sort of current area of consideration. And I wondered why that was. Is it because FSPs are not subject to the same regulatory burden or responsibility and therefore don't feel this concern so acutely? Is it actually, and this is me being very optimistic here, they're not so worried about providing this data? We as a funder based in Luxembourg may be very worried about how to get hold of these numbers, but actually Scope 3 emissions data isn't such a concern. I have a feeling that's not the case, but it would be nice to be optimistic. Or thirdly, and I think this is perhaps the most likely scenario, funders haven't been sharing their worries about the data requirements adequately with the FSPs. And I think this could be a real crunch when it comes to the 1st of January when data is due under sustainable finance disclosure regulation. And it shows the importance of this type of survey for bringing these concerns and these groups together. A concern that doesn't come out of this survey, and I wonder whether it will be discussed in the next edition, is of course the changing rate environment. As a funder, you are spending a lot of your time, particularly if you're based in the UK at the moment, watching what rates are up to. Meanwhile, FSPs are being used to seeing a lower rate trajectory. And I think this may be another area where we will see increasing divergence in expectations between groups of actors in the microfinance market. Another area that came through on the survey was that funders have quite a considerable interest in new entrants. This isn't such a preoccupation for financial service providers. Is this because of different perceptions of what's happening on the ground? Or have funders got a different view on macroeconomic trends? But what also comes through is the fact that there's such a continuity in trends over this challenging period, notably when it comes to digital trends and resilience really being at the heart of the work. And this brings me to the topic of digitalization. Now, I think ever since I've worked in microfinance, anytime you've read a report, the headline would suggest that you're expecting an imminent revolution in the industry and the total transformation to occur. But when you dig into it, you realize it's much more of an evolution rather than a revolution that's occurring. Of course, there's some really important moves in this area. I think the increasing client level data that we're able to get through 60 decibels and through innovations within MFIs. I mean, you've noticed some of them really developing apps, and particularly as a result of COVID, is making a substantial change. It's really changing the information asymmetries that used to exist in the industry. But realistically, we're sort of seeing two models, essentially. We're seeing tech models which have relatively low levels of due diligence, a relatively quick process, and a relatively swift to get money out, but which have high default rates. And these are contrasted with MFIs, which still have the high operating costs, but are complemented by having low default rates. They will have a more laborious disbursement process. I think what will be interesting, and when we may see more of a revolution, is when these two models come together. But I don't think this has happened quite yet. Another area which came through on the survey is this topic of the digital divide. Now, I think we're all acutely aware of it on the consumer side. What I hadn't been so aware of was how it was being felt on the institutional side. Clearly, there is now a risk of some MFIs being left behind through the digital evolution. And I think it will be interesting to, although I hear that there are some transformations already happening, I'll be interested in hearing more about Flow Global later, Michael. Yeah, you notice increasingly MFIs being worried about having adequate staffing and adequate technological knowledge. So it'll be interesting how this evolves. And I think SMEs were viewed as a future priority, the key future priority in the compass, perhaps not in today's survey. And this may be a similar area. Clearly, it's an interesting missing middle. Clearly, it's got a lot of potential and it's a perhaps less crowded market to be in. But it's another area where I wonder whether MFIs and indeed funders have adequate skills and understanding of the risks involved. And so it'll be interesting to see how people are able to build up talent in this area, which is perhaps quite different in the future. And finally, sorry, I realise we're running over time slightly, so I'll move on to the last section of infrastructure providers. I think infrastructure providers have increasingly been fitting into this trend, that it's not financial inclusion and outreach. Well, I think we've always known this, that is the end goal for the industry, but resilience. And this comes through in a variety of forms. I think the focus on client protection is one component of this. And what's happened with the movement from the SMART campaign and its end towards the client protection pathway is very significant. And I hope there is sufficient awareness in the industry of the client protection pathway. I'm always encouraged to see the increasing numbers of MFIs that I used to work with who have signed up for it. But I think this topic of being able to visualize resilience rather than outreach is also coming through from the increases in client-side data. I know that we had previously mentioned 60 decibels. I think these new infrastructure providers being able to provide us with new insights is a terribly important area for the evolution of the industry. And I imagine this might be an area that Stuart's got quite a lot to say on as well.
Thank you, Apricot. A couple of things on that. I skipped over for time in my presentation before on what was the last question in the survey, which was called evolution of sector-wide infrastructure, and asking respondents, yes, what are the implications of the closure of the SMART campaign or the disappearance of SEEP, but new entrants arrive as well. What is the implication of that? The consensus was, I have to say, that it's, I don't want to be facetious and say it's like a nothing burger, but the consensus was there's nothing to worry about. And that was interesting, I thought, because we put the question in expecting quite a lot of hand wringing, that that it portends, a sort of a dystopian future of usurious consumer lending nano loans. And I don't think that was the consensus among the respondents. It was that the sector is mature enough for new players to take on the role of that and ensure, and the uptake and interest in the CP pathway is evidence of that. I'm not passing any judgment on that, but I do notice we've got Isabel Barris on the call, and if she would like to, you do put your hand up if you'd like to say anything on that. The difference between, you mentioned at the start, Apricot, how differently different stakeholder groups see issues. And of course, if they didn't see, then there'd be less to write about in the paper. It is interesting, but I wonder rhetorically how much of it is because the issues are different, that they are affected. An FSP faces different things than a funder or a consultant, of course they do, and how much of it is a communications failure, that this siloization of the sector is because the funders can't appreciate the accretion of burdens of reporting, and FSPs cannot or they're distracted by the day-to-day of financial inclusion, to be able to really think through the competing pressures that the funding group experience. But let's you finished on resilience, and I'd like to ask Stuart first, speaking as a pioneer of diaries and a pioneer of understanding clients' lives, what the Bangladeshi diaries project that continues has told you and your team about how resilient those households are. In other words, let's start with what has been the impact of the pandemic from what you've seen. You're muted, Stuart.
Thank you, Sam. Yes, well, we have been tracking a group of low-income households in Bangladesh on a daily basis since 2015. So we were very well prepared to see exactly what happened to their lives and their livelihoods and their finances during the pandemic. And if you go to our website, you will, in fact, see a special page in the website that's devoted to that. So if you're interested in that, go and see it. Let me just give you a taste of it by telling you about something that I've noticed fairly recently, which I think is interesting. This is not a research finding. This is a hypothesis that my team and I have come up with lately that I'd like to tell you about. And it's this, that compared with before the pandemic, our diarists are taking only half as many MFI loans now. And we were interested in that. We thought that was a very interesting finding. So we did a survey amongst all our diaries to ask them why they thought that was. And a very large number of them, more than half of them, said that they thought taking MFI loans might lead to difficulties with repayment. That was the single biggest response that they gave to the question, why you and why do you think others are taking far fewer MFI loans? But they also gave us some other clues, and putting all that information together, the impression that my team and I came away with is that when the MFIs closed for a few months in 2020, at the height of the pandemic, that gave many of our diarists a chance to take a rest from MFIs and the MFI loans, because the government asks the MFIs to close, and the MFIs no longer issued loans, and they no longer collected loans for several months. And I think what happened is that that moment of reflection has had consequences. It gave diarists a chance to think about their relationship with their MFIs, think about their own history of taking MFI loans. And I think quite a lot of them concluded that, you know what, I didn't really need an MFI loan. I took them all because I was in the habit of taking them. Remember that MFI loans have been around in Bangladesh for several decades now. And that after this kind of enforced stop, they had a new view of their relationship with MFI loans, and many of them decided to cut down on the number of loans they're taking. So I'd be very interested to see whether that phenomenon has been observed in any other markets. And I'd be very interested in anybody's views on whether our interpretation of that significant drop in the taking of MFI loans, it was true in both. If we measured it by number of loans or if we measured it by the value of the loans, it was true that there was about a 50% drop from the period before the pandemic to the period since the pandemic has been dealt with and life is pretty much back to normal.
If anyone wants to share any client levels of COVID impact data beyond these, please put them in the chat if you want to put any links or put your hand up. One thing was the Financial Access Initiative ran over the last couple of years interviews with CEOs of market significant MFIs on the impact of it. Maybe Daniel, who worked on it with me in part, could put the link to the page in the chat. That's not client level, it's not quantitative, but you get rich insights into how people's lives change either organically or because they're sort of forced to as well, or what institutions do when they're up against the wall. You are a long time advocate of the importance of savings in a variety of a healthy portfolio of financial products and services for any low-income household. And when we were preparing this, you were curious, even perturbed that how little it was mentioned in this paper. Can you expand on that?
Yes, certainly. I'd like to spend my few minutes on that subject, if you don't mind, Sam. And
Oh.
I'd like to have a bit of a rant for a few minutes. So you and all our listeners, please forgive me. I want to turn our attention to something that isn't in the report: savings. Did you notice that the word savings appears only once in the whole report? The word insurance appears twice, the word pensions, not at all. Compare that to the word gender, which appears 30 times, and education and financial literacy, which between them appear 20 times. Now, if any of you did notice this, you might like to give us your views about it via the chat button. To me, it makes it look as if financial inclusion is still seen mainly as being about debt. In the report, more loans are called for micro entrepreneurs, for farmers, for women, and for the very poor. I just hope that this doesn't mean we're going back to the belief that debt can solve everything, from poverty and women's inclusion to economic growth and climate change, or to the belief that when debt causes problems, they can be remedied easily by financial education, rather than what I would like to see, than by lending less, lending better, and promoting savings. I shall make it clear that I'm not against debt. Loans can be very powerful, even for very poor people. But I am sorry to see that it looks like debt still dominates the microfinance mindset. Now, this kind of thing has happened before. For example, in the medical profession, bloodletting was once the most common treatment for several hundred years, used for everything from seizures and asthma to mental illnesses and the plague. Bloodletting seemed a plausible idea and was backed up by some authoritative voices. So doctors who knew that their income depended on it worked hard to make people believe it was effective. They used high-tech gadgets to make bloodletting quicker and more impressive looking and more profitable. I think you get my point. A modern historian writes that, quote, bloodletting success was based on a limited view of disease processes. And I think that in much the same way, the preponderance of debt in the microfinance toolkit is based on a limited view of poor people's financial lives. I've been talking to poor people about their finances for almost 50 years now. And if there's one thing that I've learned, it's that saving is what you do when you are in control of your money or want to be in control of your money. Borrowing is what you do when you have a really good opportunity or face some compelling need. The households that I've talked to that are really financially healthy either own or are creating reserves. Financial reserves, physical reserves, social reserves. Reserves build resilience, resilience that can offset the risk that comes with borrowing. A household that has savings and can borrow safely against its savings is a much healthier household than one that has been tempted into constant debt by a well-meaning MFI or an ill-meaning smartphone application. for MFIs, doing savings is hard. I know that. It's much easier to make money from debt than from helping people build their reserves. But isn't that exactly why saving should be one of the biggest issues in microfinance? To me, it's disappointing that the contributors to the survey, given the chance to look up from their spreadsheets and talk about the big issues, have almost nothing to say about savings. Thank you, Sam. I'll leave it there.
Thank you, Stuart. I mean, and it's not just in the paper that there was a lack of mention of savings, but in the raw data too, it barely appears more. And so that is true. It's not just that I decided clear that I didn't like the word. I wonder to some extent, this is also an issue of repackaging and rebranding concepts that people see savings as a legacy term, or rather a discrete product, but increasingly it's so we added financial health as one of the terms this year. I think a term that has been woolly and nebulous in the past, but is starting to make a lot more sense as a way to as an objective in the sector, and the way that people describe that, and there are various definitions, and it was clearly important to respondents, is increasing resilience, the ability to plan, the ability to protect, the ability to remove stresses at the household level, to be able to invest. This sounds to me like a way of describing what is a suite of products anyway. So like what I mean is sort of implied in there is savings. You can't have financial health purely by access to credit. That would not be right. So I mean, I'm just defending the respondent base there by giving a devil's advocate position that perhaps they do care about savings, but they call it something else now. But I would like to so Johanna's put in the chat about the 60 decibel survey. Thank you. And we've got from Kasha from MFC on the impact of the lockdowns. So thank you for all of that. And yes, and Isabel said that the closure of the SMART campaign didn't happen in a vacuum, and the strong role of SPTF and CEIBS, and that was made very strongly in the respondents that yes, they weren't blasé about the end of the SMART campaign, rather than it's in good hands in its new incarnation. Sorry, Apricot, go ahead.
Absolutely, apologies if that's what you thought was coming through from me. I think it's very encouraging seeing how quickly there's been an evolution from the SMART campaign to the client protection pathway, and I've been impressed at how quickly MFIs are taking it out. But I still think there's an important role in spreading the word, because awareness is still, from my perception, slightly less on the ground among MFIs than perhaps it was at the SMART campaign. And so the importance of using these forums to make sure people are aware of this. But well done to CEIBS, well done to SPTF, certainly.
Interesting point there from Anne-Marie about the intertwining of savings and loans. Diarists saying they take a loan because it forces them to save, and then sometimes they take a loan to get an asset which serves as an insurance. So I think the siloization of products, like we used to talk about 3 major pillars of financial product, and we still think in those terms. Perhaps that does deserve a rethink or a new way of describing it. I wanted to ask, unless there are specific questions coming through to either of you, I'd like to ask Apricot and Stuart whether on balance things are moving in the right direction. This is an extremely difficult question, so I don't feel like you have to give a concrete answer. But if you, okay, Stuart, if I took you back 20 years, let's say, to maybe even 30, into the 90s, let's say, when you were really building the diaries methodologies that led to those books. And Apricot, I won't take you back as far to be But over the last, let's say, 10 years timescale for you, and if you could tell that earlier self about that earlier self could see how things are now in terms of regulation and client protection, debt rates, right, everything, how do you think you'd be upset, or would you say that on balance things are going okay? That's a very difficult question, but I'd be interested to hear what you have to say. Stuart, you want to go first?
Yeah, I'll go first. Some days I will be depressed and some days I will be happy, Sam. My 1990s self would be happy to see that at the end of the decade, Grameen Bank shifted from its position of believing that loans were the only things that were useful to poor people, and that savings were not at all useful to them, to becoming one of the best microfinance savings banks in the world, to the point that now MFIs in Bangladesh, not so much in other countries, but in Bangladesh, are the prime keepers of poor people's savings. And if you look at our diarists in our current program, for example, their holding in savings in Bangladeshi MFIs is much larger than their outstanding loans. So I will be very happy to see that. And I would also note that despite what I was saying early on about savings, there are many projects, there are many researchers looking at related areas, as you correctly say, Sam: resilience, product design, how to reach the very poor. All these things, which are very important, and your survey has shown that people in the industry think they're important, and that's right. All these things are linked to saving. So resilience, as I was trying to say in my little rant, is strongly linked to savings. Reaching the very poor is also linked to savings. Product design, coming out of the silos, inventing products which are hybrid products that allow people both to build reserves at the same time as being able to take loans when they need them. There is a considerable interest, and there are around the world lots of experiments in these areas. So I will be happy with that. What would I be unhappy with? I would be appalled to see the number of get-rich-quick smartphone applications stealing people's personal data and forcing them into debt. I will be absolutely appalled.
Well, you'd be even more appalled if you moved back to the UK, the wongification of this economy. But well then, Apricot, I'd like to ask you the same thing, and you can either talk about.
I've seen Edward's question as well in there. The other week I was asked to do, or we were discussing a very interesting exercise, which would be, if you were writing a newspaper for the past 50 years, what would the headlines be? And if you start to look at that, you suddenly think how many reasons for optimism there are. In fact, let's look at the 10-year time period which Sam set me. We've got the Findex data that has recently come up, which gives you immense reason for optimism, how much financial inclusion has evolved even over the past decade. And even the incredibly difficult time of COVID has actually resulted in two, I think, very important and very optimistic trends for us. One is this increased openness to innovation. We've really noticed a bit more of a technological takeoff. We've realized there's a lot more innovation in getting news from end clients. And secondly, it's opened up a new culture of collaboration, which I think is absolutely fundamental. So on a 10-year horizon, I'm incredibly optimistic about what's happened. But we are at a very difficult time now. And I think Edward has highlighted that what are the upcoming consequences of major geopolitical changes and deterioration of security. What's very much worrying me is what this implication is for funders. We're now in a period where governments are likely to be reducing their international aid. What does this mean? We're also in a situation where a lot of people have a lot less disposable income. Is this going to result in less funding going towards microfinance investment vehicles? Perhaps even microfinance investment vehicles may be looking a little less attractive as investments when we've got such precipitous rises in rates. So I think this is a real concern that is tied up with the geopolitical changes that we're seeing at the moment. Sorry, that's addressing this from the funder's side. There's probably more to add from the perspectives of all the other participants in the survey, but it's a real worry of mine. However, I would like to end with the optimistic note of how far we have come in the past 10 years.
Thank you. Yes, I wonder that newspaper point is an interesting one, isn't it? As a fun exercise. And if one of the headlines would be, if the modern history of economics and geopolitics tells us anything, one of those things is that in times of economic crisis that affect the poor, then that it's followed by a period of isolationism or nativism, and that would be a terrible shame. If particularly among young people, and I'm speaking just my personal opinion here, the level of philanthropy and social engagement among millennials, Gen Zers is so impressive. I mean, it's that if there was a retrenchment because of a sort of a Maslowian, if you're in trouble, you take care of yourself and your nearest first, and you can't, don't have the luxury of caring about others, that would be a terrible indictment. And so let's hope that that's not an outcome of this. But I too, and I defer to you both, but my modest experience and perception is on balance optimistic too. I think there's an enormous amount to be impressed with and pleased about. You should no need to be a Cassandra or like Panglossian about it. There's a middle ground, but I think that a lot is going well, and I think that does come through in the survey, and it has done in the last few. I think Daniel's put in a comment there. I'll leave you to read as well. Camille, I will wind up here. I want to thank you both very much for taking the time to come and speak. I'd like to thank everyone to come, all my colleagues who support in putting together this paper. It's not a one-person show. Also FinDev Gateway for helping to promote it. Camille has posted, and perhaps she could just post again so it hasn't got lost in the chat, the link. We've just published the paper in 3 languages on the site. There's also a news item, and there you can read it. I hope that you will. There is an executive summary, but if you really want to get into the fascinating direct quotes that the respondents get, please do look at the paper as a whole there. Thank you, Camille. And feel free to distribute it or re-promote it on your own networks, including we'd love it to be read by as many Spanish and French speakers as possible. So if anyone has very good contacts through those regional networks and practitioners, please do so. So thank you again, everyone, for coming. Hope you enjoy that. Apricot and Stuart, and everyone on Europe time, have a good day. And Stuart, have a nice evening. Thanks, everyone.
Thank you, Tom.
Thanks. Bye-bye.
Thank you very much.
Thank you.
And congratulations on the report.